Hello everybody, welcome to a new episode of Vision Business Talks. Today I'm glad to host Alessandro Sbrizzi, who is co-founder and head of corporate development at Alpian Bank, which is Switzerland's first digital private bank. So I would like Alessandro to introduce himself briefly so that then we can dive deep into our conversation.
Okay, thank you, Giovanni. Hi, everyone. Thanks for listening to this episode. It's a pleasure to be here and to have a chat with you, Giovanni. As a brief introduction, I'm Italian, as you can hear from my accent. And I had the pleasure to work on the launch of Alpian, which is the first Swiss digital private bank. We define ourselves like this, and my background, it's a business background, typical, let's say, profile of the poor guy that study business and then does consulting, international experiences. I lived in India and in Spain before moving to Switzerland 5 years ago. And in brief, this is a bit about myself. I'm Napolitan, so I love football. I love all the stereotypes typical of Italians and Napolitans are pretty much applicable to me. So if you want to get a quick picture, I think that's an easy one. So that's it. I think
Amazing.
We will have more questions to answer
Sure.
and deep dive on topics of interest. So I leave the word to you.
Amazing, Alessandro. So, like me and many of our listeners, so you're a Bocconi alumnus. You had the chance, to experience that path. And to start off, I would be very curious to understand which experience in, your maybe path as a student has influenced you the most, making you become the entrepreneur that you're today, so that, somebody could see himself maybe in your shoes.
So we start with it's not an easy question, right?
Not
I
an
mean,
easy
it's
question.
not a straightforward, but um, there are for sure at Bocconi, and I believe, to be honest, in many business school and universities nowadays, we have all, let's say, very busy schedule, very probably challenging for different aspect experiences during the university years, living alone for the first time, adapting to a new environment, the exams, of course, the extracurricular activities, the job market pressure. So I think what helped me, let's say, getting ready for the entrepreneurial path was probably this diverse set of challenges and experiences that you have to live to go through the years, right? So I think that's a bit what happens in your day to day as a co-founder, where you basically are wearing in every call of the day or every session of the day a different hat, and every day you never know what's going to happen. Every week you never know what's going to happen, and as much as you try to plan, you know that you have to be ready to change your schedule and adapt to changes. So I think this is something that Bocconi, and of course the level of complexity of the challenges that Bocconi poses are very high, so you are ready to handle different challenges. Also, the workload, I think, is something that was very, very, very important. The fact that it's not an easy life, so you are aware that you don't need to just do things. You have to do them well. You have to do them as best as well as possible compared to your peers, which are very talented one. And in the market, it's like this. Every competitor is striving to do the best, and you cannot just do, okay, I complete this activity, I deliver this product feature, etc. You have to always do it at the best of yourself, and that allows you to overcome the competition and improve your positioning, etc. So these are some learnings. Probably there are many more, but let's say these are the first one coming to my mind.
So true, so true. And I think it was very interesting to see like that after your path at Bocconi, you then started your career at BCG in Mumbai and then moved to Alchemy. So I'm very interested in understand how come you moved from Italy to Mumbai, and then what led you to leave the consulting world and then venture into the, entrepreneurial world by founding Alpian.
Mhm. So that's an easier question, let's say. So now we get into something a bit more straightforward, I think. Or so moving to India was was a decision that they have taken exactly was December 2013. So we were at the first year, during the first months of the first year of the Master of Science, and we were in that phase in which you are choosing or trying to select the destination for double degree and the exchange, right? And back then I could list, put in order the destinations. And when going through them, you were reading the comments and the experiences of other students that already spent time abroad. Those that were in India was never in the top list of my ideas, my assumption before going through this material. There were some guys that have been to India. Actually, most or almost all of them were enthusiastic about the experience of studying there. So I said, you know what? I already spent my exchange during the undergraduate in a more, let's say, in a Western university. I was in the US. I said, you know what? Let me change and let's try to do something a bit more dynamic, more diverse, more, probably stimulating for other aspects of the life outside of the academic experience. And I decided to. I said, okay, let's just do that. It's just double degree. It's just going to be a few months and whatever. So I got selected for going to India. In fact, it was almost like I said, you were selecting India because no one wanted to go, right? So it was kind of a self-selection process. It was an amazing experience, really, even better than the one that the people that went before me described it. So it was great. When we were there, we got the chance to apply for internship in India at the end of the double degree program. I got selected at BCG. Said, you know what? Again, let's just do it. It's just an opportunity. Let's take it. And then I come back to Europe. I do the internship, another incredible experience, a super interesting project, great team. I was always the less smart in the room, I was always the one that was not smart in the room. So it was great and stimulating. I said, okay, you know what? At the end of the internship, they decided to extend me a full-time offer. I said, you know what? Okay, let's start here again. So it was easy somehow because it came almost like without much planning, but it became like this. And then so India became a reality and I decided to stay there. For after a couple of years, one of my mentors during the university years contacted me because he was opening a branch of Alchemy, a digital consulting firm specialized in digital transformation. And contacted me. He was leaving Groupon. He used to be the CEO of Groupon. I said, look, I need someone like you to help me in Spain. And after 2.5 years in India, the proposition of moving to Madrid was very exciting. So again, in a very informal discussion, he said, you join me, come to me, let's do this experience together. We opened the office. We were 2. And after 2 years, we were 100 people. So it was a very exciting journey. Madrid was wonderful. And so let's say that was very, again, smooth decision. And when Alpian, the opportunity about founding Alpian came, it's another chapter that we can discuss. But that coming back to Bocconi and how the journey started about India, I think this was the inception.
The main point. And just out of curiosity, is there anything in particular that you remember about your experience in India? Maybe something that struck you about the daily life there, the working life there, maybe the working culture, how people are used to, communicating or living or working with each other. Something that you find very different from here.
So I think that thinking about the experience in India and what it's what you notice as different, it's very simple to identify because it's everything. Basically, any activity that you do from waking up to going to sleep, it's completely different from how you will do it in the Western world. For example, the apartment in which you live, the way in which you have a breakfast, the way in which you go to the commute to the office.
What did you have for breakfast, for example, there?
No, for example, I got used to have my flatmate were Indians. We were university flatmate, and they were eating spicy, salty food. I am from the south of Italy. I was eating only sweet food, cornetto, this kind of brioche, this kind of food. And the guys were eating, cooking heavy, spicy food.
Yes.
1 month, 2 months, 3 months, 6 months. After a while, you get used to it. It's there. They
Yeah, you
love the
start eating that.
cooking. You start having a breakfast like this. Then in Europe, you used to take a scooter or take a bus or a metro to go to office. In
Hmm.
India, you cannot do that. You have to take a Uber. That is
Ah,
very cheap, very convenient, but you have to explain to the driver why they have to pick you up. He doesn't understand
okay.
because there is a communication issue. Then there is the traffic. Then there is the road that is collapsed, then they have to change, and then you arrive to office, and there is the sessions, the way in which the work culture, it is different. There is no. I think there is no secret in saying that there is different work habits. Meetings are structured in a different way, but you are still a BCG consultant. So you are working as a BCG team. Your client, maybe it's more difficult to reach. It's more less structured. Expect you to do different things. So. Or maybe when you go to eat with your colleagues, again, there are some habits, some way of doing it that are different from you. So throughout the day, while you go to the office, what you see looking outside of the window is totally different than what you used to go when you in a place where you grew up, right? So there it's you see people, unfortunately, very poor, living outside the street. So you go to you go to office, you commute, and you realize, how many differences there are exist in the world. I mean, so it's everything you do. I'm thinking about the Wi-Fi connection. I thinking
Yeah.
about food poisoning. You never know what's going to happen to you, and what you do during the day. It's always a discovery, and many times it's easy, many times it's more difficult. It
Hmm.
depends, and you know,
And would you
but
do it again, just to conclude
course,
this
of course,
story? Okay.
absolutely, 100%. I mean, it's an exciting. I mean, again, you ask me the question: would you move today to India to grow your family there? I would probably say no. Would you go there? Actually, moved to India more than 10 years ago,
Hmm.
when I was 20 years old, and you have nothing to lose, right? You go there, you study, you work, you have fun, you can travel a lot, and you add these experiences on top of your professional career. So,
Hmm.
I mean, there is no, I never see a downside. Then probably today I would not move there in this phase of my life, but I'm going there for on holiday in 2 months. So
Okay.
you remain
In a
attached
very
as a,
interesting,
as a yeah, as
very nice experience.
yeah. But
Yeah.
I suggest, whoever is listening to this, if he has the option to choose between going to Spain for an exchange and going to India, try India, because you will go to Spain as soon as you can to work or to travel, etc. To India, it's probably a bit less frequent as an opportunity. So if you believe you could handle it, because it's not for everybody, but I think it's going to be very, very interesting and exciting.
Amazing. Okay. And like going straight forward to Alpian. So we said Alpian defines itself as the Switzerland first premium digital bank. And like I'm very curious to know from you what differentiates Alpian from, traditional banks and other fintechs in your field at the moment.
So yeah, we didn't have yet the chance to describe what Alpian is and does. So maybe I'll take 2 minutes to describe
Sure.
what we do, and then address your question. So Alpian today, it's a pure digital bank. So the clients can operate only via mobile app. We offer the traditional neo-banking services to our clients, so a multi-currency account, a digital experience, a chat, any kind of service you can expect from a digital bank. And on top of that, where we invested and where we built our differentiating factor compared to the existing neobanks, is the wealth management aspect. So we offer to our clients the opportunity to invest into discretionary and advisory mandate, which is something that is a bit less frequent, to entry ticket as small as a few thousand Swiss francs. So the idea is to democratize access to this kind of services that are typically provided by private banks to clients that have million of francs. And why we can do it? Because let's say with the cost of a digital business, you can offer a similar level of quality of service with a much lesser entry at scale, let's say. So this is a clear differentiator for us. Then we offer, for example, a relationship manager support of a human person accessible through video calling app. Of course, the chat I mentioned, and this kind of, let's say, a metal debit card, a series of events dedicated to premium clients. We're about to launch a premium service that it's for clients that do specific activities with us and have specific recording usage of our services. So we try to create a bit of a premiumness in these activities. So that's about a bit Alpian per se. Then, there are, let's say, for example, what differentiates us from a bank is definitely the fact that we try to do, we keep this, we are a bank. So compared to a traditional bank, we have our risk function, our compliance function. We have to meet our regulatory relations. We have auditors, internal, external.
Definitely.
I mean, we have that part of the activities which is quite complex and painful, but it's very useful to define yourself as a bank. But at the same time, we have the agility to move internally and externally at a faster pace. So we are able to ship new product feature much faster because we are a much smaller team. We can be, as a management team, all together in one room in a matter of hours. We can take decision very fast, and we can implement, let's say, much faster. So that's something that is there. What we also, I think, what differentiates us from a new bank, from a fintech, which is not a bank, is the fact that typically has this kind of agility, for sure, and probably has more agility than us, is the fact that we approach the financial service needs and let's say opportunities or clients needs, business opportunities as a bank. So we respect and we are aware of the fact that certain activities brings value to the client. So while at times you see certain fintech activities that because they don't need to, they are not regulated and they are not, let's say, they don't regularly have to do certain, let's say, compliance and activities which are painful, and I said it before, but are needed. They tend to take decisions a bit too that might not necessarily prevent the interest of the clients in the long term. So we feel ourselves a bit as a blend of a digital or a neo fintech and of a traditional bank. We try to be at the in between, but we do it as a regulated entity. So we don't just say it. We are regulated. It took us 2 years to become a bank, so it means that we went through deep and rigorous audit and reviews and discussions with the regulators that allowed us to be very serious and reliable when it comes to offering our service to the clients, which is very important. Security, it's a topic, especially when you want to be. We have been the first digital bank fully based on cloud in Switzerland, so it's something that clients need to trust you when you do this, and you cannot do it just saying, okay, I'm a fintech, we are 3 guys working outside from our garage and managing your wealth, to give us your retirement funds and we'll make you manage them at the best of your best of your interest. Of course you want to do that, but the reality is that it's difficult to get trusted, right? So you have to, I know it's an inflated word, I don't like to use it, but it's a reality when it comes to the savings of your life, of a mass affluent that maybe has only that money to live for the rest of his life, or someone that is saving every month a little bit. You want to make sure that you do this in the proper way, and to do that, external controls as well as internal controls are very useful.
Are necessary. Okay, and for example, you mentioned that mass affluent is the type of client that Alpian focus on to. So mass affluent, as far as I got, is a type of, let's say, investor or let's say person that has between 100,000 and $1 million that are investable. So just for investment purpose, right? So I'm very curious because I think this is actually an amazingly interesting niche in the investment world. And I would like to know from you what specific needs of this segment were not being met by the market when Alpian got in. So why did not other banks or fintechs focus on this sector? And maybe if you think that still there is much room, to work and try to
Yeah.
get this type of investors, which are very interesting
Yeah.
niche actually.
I totally agree with you. They are very interesting for us. I think the segment below 1 million, without
Hmm.
necessarily a minimum, it's an interesting segment. Why? Because it's typically a segment that doesn't get attention of premium, or let's say personalized service. You get a standard service. Of course, if you have 50K or 5K you want to invest, there is a bank that tells you how to manage them. But they will tell you in a very standardized, they will answer to your need with a very standardized service, and probably at a price point that is not very convenient. Why? Because they can reach that level of personalization, and that's it. It's not that we are the first one offering investment services to the affluents, but we are the first one trying to be personalized. At Alpian, every client has a unique portfolio, which
Hmm.
means that through the questionnaire that we do during the onboarding phase, we are able to come to defining a portfolio which is unique to you, that we believe it's aligned to your long-term objectives. We will probably not get you the best return in the market, or the highest return to the market, but we'll try to be the best according to your risk profile, to your objectives, to your age, to your wealth. And many times it happened to me, for example, then when I spoke as a client to my one of the relationship manager, he told me, look, Ale, don't invest now, wait a bit, because you still don't have enough savings to manage your cash, to manage your expenses. And I said, you know why? I mean, I believed I had. And he explained to me how it's more appropriate to do it when you have enough savings, for example, to resist 6, 12 months of turnover of your expenses without receiving an income. And it starts telling you with a long-term objective how to manage your wealth, how to grow your to improve your financial stability. And why we believe this is important, because ultimately this aligns with the interest of the bank as a business. Because if your wealth grows, and we are able to preserve it and to make it grow, we managing your wealth grow with you. And we manage more asset under management, we gain more fees, and so we have aligned interest. There are other banks that, for example, issue financial instruments that are then placed to the portfolio of the clients, and this allows them to make margin on the transaction. So they're incentivized in the selling, buying, selling, making transactions in your portfolio, because they make a lot of margin there. And so it depends on the business model, but when you go to these large institutions, that's kind of an incentive that they have, or they have a sales goal. So the relationship manager has a personal quota that he needs to reach. So he pushes you to invest, even if it's all the savings of your life, and maybe you are retiring and you won't have another income apart from your pension, and it's better to be conservative. So we try to be we have the luck, because at the end of the day, we are lucky to be in our position, to start from scratch, to not have a legacy structure behind, so we're able to offer these services. Do we believe that we are the only one doing this? Not at all. There are a lot of digital wealth managers doing it. There are not so many banks doing it,
Hmm.
especially digital banks. So that's something that, as I described before, I believe brings a value, because allows me to really believe in what I say, and have the trust of, not only bring the trust on the table of the regulator, of a financial regulator like the Swiss one, which Okay, recently, after we started, had been a bit, let's say, complex in managing certain situations like the one of the Credit Suisse UBS case, but in general, it's a market where for wealth management services, it's famous for doing it in the right way, right? So I believe we are in a position where we can do a great job. As a client, before meeting Alpian, I didn't have an alternative like this. My sister today morning said, "Ale, help me managing my wealth tomorrow. Give me advice. Let's take 1 hour free," because there is no one that really. It's always difficult for a doctor, for an architect, for a person that is not in finance and that follows the market every day, take the time and to have the trust of someone that that really does it well. So I think there is still a lot of opportunity to address these needs. Small ticket size, we start investing, we allow investment as small as 2,000. Of course, there are different mandates, but 2,000, 10,000, and 30,000 are different sizes. But you can try the services with as little as 2,000. So in Switzerland, it's an entry level, very accessible that we believe can allow a lot of people to see the benefit of investing and savings, which is something which we believe everybody should do.
So I see, for example, what distinguishes Alpian is this personalized, tailor-made, advisory, let's say, on the investment side of a client, right? And I read that there are actually two types of mandates, mainly, I think. So guided by Alpian and managed by Alpian. And I really like the fact that in the guided by Alpian one, then I will let you obviously define them properly. But the guided by Alpian one likely gives you the chance to have a bit more margin of control on the types of investments with still the suggestion of a professional. So if you could briefly explain how these two mandates work and why are they very innovative in their landscape? Like, for example, on the other side, as you said, usually banks propose to their clients product that are issued by themselves and make them earn a fee. So how do the incentive path work for somebody at Alpian suggesting a product to his client in this case?
So I will describe the mandates and I will come to the incentive part. The mandates that we offer to the clients are, in fact, pretty standard in the industry for what comes to the type of service. So a discretionary mandate, which we call managed by, and an advisory mandate that we call the guided by, are services that private banks offer, I think, since tens of not hundreds of years. And they work very let's to be a bit more technical. In the discretionary mandate, the clients delegate to the bank the management of the funds. The bank manages the funds according to the risk profile of the clients, while on the advisory mandate, the client gets a risk profile and share his experience, his knowledge with the bank. The bank proposes to the client certain investment opportunity according to the risk profile and according to a strategic allocation, and the clients can ultimately say yes or no to the investment proposed, right? So that's the kind of advisory service. And this exists already. If you go to a private bank, if you go to Pictet, if you go to Julius Baer, if you go to Fideuram, that's something that they have since many years. What changes for us is that, and they do it in a personalized way. So if me and you that makes the same money, lives in the same city, have the same age, go there, we'll get different propositions because probably you are a bit more risk taker, I'm a bit less risk taker, you are more interested in certain sectors. So they do it in a unique manner. We do it as well in a unique manner. So each client has a unique portfolio, both in the discretion, different proposition, both in discretionary and in advisory mandate. However, we do it at scale with an investment as small as a few thousand Swiss francs. While Pictet, if you have less than $5 million, probably they don't even open you the door. If you go to a Julius Baer of the world, probably you need at least 2-3 million. So you benefit of the personalized service if you can afford it.
Sure.
If not, you get a standard service, which maybe it works. And to be honest, it's better a standard service than nothing, but has certain limitation, because me and you and probably my mother and your father are probably treated all the same way, because they say they have a risk profile of balanced. Okay, that typically the banks have 4 or 5 different risk profiles. According to risk profile, they have some standard portfolios, and they offer to you one of these portfolios, and then all the mandates within those buckets are treated similarly.
Sure.
And of course, life is different, risk appetite is different, so you risk to have a performance that is a bit less aligned to your needs. Coming to the incentive, which I think is also an interesting point. At Alpian, we work with an open architecture, which means that we don't offer investment within the portfolio. We don't offer financial instrument produced by us or by a selection, only few houses, a few providers of financial instruments. We are open, so in the sense that we regularly see the list of instruments we want to introduce and to add to our portfolios, and we let's say we don't have any retrocession on the introduction of the service, of the instrument within the mandate. So it's pretty straightforward. In addition to that, our relationship manager, which are those that help you in the conversation when it comes to investment, don't have any variable components of the remuneration linked to the volume of the sales activities. Okay, it's rather in our case an incentive related to the satisfaction that the clients express at the end of the call that they had, kind of the Uber kind of mechanism, right? You have a 5-star mechanism. You rate the advisor, and based on that, yes, you have a discretionary, let's say, compensation of your performance. So that's difference for us, and I think so far it's worked very well. I mean, that's part of the business is going well. I don't know if we'll come, but I anticipate the challenges are on other areas, are on growing, being known, making people understand the value of your service. That's the very big challenge that we as Alpian and other startup, any other startup probably we face.
And for example, Alessandro, just to close this chapter again, do you also offer investments in private markets for your clients as well?
Not yet. We have as an alternative asset class we offer some exposure, for example, to ETFs that have some exposure to real estate, to commodities, to crypto as well. But we, in terms of direct private investment, is not something that we handle at the moment. Let's say that there are often different, let's say, point of view on this, in the sense that our chief investment officer, believes that with the right diversification, you can achieve performance aligned with the interest of the client, especially for the affluents, without necessarily having to introduce your private investment. I think they are growing a lot. The interest on private investment is growing a lot, and it's a reality for probably private clients, or so high net worth, ultra net worth. That's something that you must have in your offering. For the affluent, we believe that with the ETFs, which are the type of instrument that we select for the mandates, you can already get a good diversification and good performances with those that are the objectives that we set.
Okay, Alessandro. And finally, so given your, let's say, privileged position in the fintech world, so at the forefront of innovation, I'm curious to know from you, what trends do you see emerging in the banking and wealth management sector over the next 5 to 10 years?
So this is a good question, and I'm not that kind of visionary and inspirational person. So let's say I have to think about it. But for sure, for me it's easier to address the question from the point of view of traditional banking, okay? Because I had the experience to see beyond Alpian, our shareholders were part of a larger. We became part of the Intesa Sanpaolo group during the years, and for example, I can relate to that, and I see that these large institutions that have very large client base, very established, very also balance sheet, important balance sheet to keep up with investment. I think the challenges for them and where the trend is going to be in the future is going to be in terms of consolidation, maintain a soul, and ensure that you are able to offer a consistent service to the clients despite the challenges and the pressure on margin that is going to come during the years, coming from different perspectives. So, for example, be able to maintain your level of services by having to reduce the number of branches. How you do that? Maybe with automation or with improving the customer support, the support of AI. So these are topics where I think a lot of exercise will happen. At the same time, they will continue. The banks will continue to have heavy consolidation pressure, while in an environment where states tend to be more and more thinking more and more in a how do you say in English, in a not independent way, but in a more conservative way, where they prefer to keep their local interest in place. So in a context like this, they are forced to consolidate, and it's difficult to do that because consolidation brings complexities, and you have to optimize cost while you want to keep the same level of service, and you have to compete with the new players that are a bit more that allows to manage clients in a bit more at scale, and maybe taking risks and cutting certain shortcuts doing shortcuts that typical traditional banks don't do. So it's very complex, and for them, I think the trend is going to be a bit more on the automation, manage process at scale, reduction of cost. So yeah, these are a bit what I see coming in the next years.
But like, for example, because you see clients that are becoming increasingly aware of, for example, the investment opportunities, the costs that they incur with their bank, and therefore they are likely to, gonna pretend better services at a lower cost. This is it, if I got it.
Absolutely. So you summarize it well, for sure. That's you bring it to the good point of the clients, right?
Okay.
Why would you? It's correct what you say. Why would they focus on that? Exactly because there is much more. I think there is an increasing awareness regarding the possibility and the service that you can get, even if I think there is still a lot of room to do it. I think in Switzerland, probably 97% of the wealth it's with traditional banks, not with neobanks or fintech. So taking a local example, but probably also global, if you look at the case of Revolut, where it's on the mouth of everyone, they have the AUM, they have, I think, maybe 20 billion or 30 billion of asset under management. Fideuram, which is a big player, but it's still a local player in Italy, has more than 300 billion. So, and there are, as Fideuram, many other examples globally. So I think there is still room for digital players to explain and to make people aware of the fact that they can get better services at a fraction of the cost. In the meanwhile, traditional banks have the opportunity and are investing to try to maintain secure this position and this market leader situation. So they have to do it, and yeah, that's the challenge for them. Don't do it too late.
Don't do it too late. Okay, so Alessandro, thank you again for your time and for contributing to this episode, and see you to the next episode. Bye bye.
Okay, thank you, Giovanni. It was a pleasure. Bye bye.